Midweek, trading at their lowest level since early December, led lower by meal futures on prospects of improving weather in South America. Michelle Rook is back with this analysis of Markets Now.
Wednesday was a down day in all but old crop corn. Don Roose with U.S. Commodities joining us. And some of the pressure that we saw in a lot of the commodities, Don, was kind of tied to anticipation of the Fed announcement. We know what that is, a quarter point. Now, can we go back to trading some fundamentals or not?
Well, I think most definitely it's been a risk-off type trade. We've got the soybeans that are caught long yet, a long liquidation there, and then the corn market caught short for the first time in 2 years. So I think we're back to looking at the fundamentals, and that means Brazil still has a wide basis, $1.50 cheaper than us, and the upfront corn, China underneath the market buying, so we reached some support there, Michelle.
So we have at a technical breakdown now in soybeans getting below the 100 and now the 200-day moving average. So do you anticipate a lot more liquidation as a result?
Well, I think when you look at it with the big drought that we had in Argentina, we should be finding once we can get this Brazil crop tucked away, we should get some fundamental buying start to show up again. So I would say we've taken an awful lot of risk premium out of the market, Michelle, and we've got a long way to go before we get a crop here. And that's going to be the big watch going forward is what's the weather look like, what do the acres look like, and the acre mix. So I would say we've got enough of the risk premium out of the market for right now.
And corn held up well despite the fact that we had wheat and soybeans lower. So the corn market is getting a bit under it just because we've seen that export demand from China?
Well, most definitely. China's been underneath the market here for 6 out of 7 days. They've been underneath the market buying corn. That's a big support. When you look at new crop corn, it went under that all-important 550 mark. That means we don't have a lot of risk premium in the market there also going into the springtime, Michelle. So I think it's one of those, before you can go up, though, you have to quit going down. So we'll see if we can stabilize here at these oversold values in the market.
Yeah, and the funds, as you mentioned, have really started to push short. Do they continue to do that or not, Don?
Well, it's unusual for the funds to be short wheat over 100,000 contracts, corn over 50,000, probably close to 60,000 contracts going into spring. So I think it's going to be unusual, Michelle.
All right. Thanks so much for joining us, Don Roose, U.S. Commodities. We'll have more Ag Day coming up.
For all your risk management and trading needs, call one of the U.S. Commodities specialists at 800-247-4071.